Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 23rd of March, comes to you from London. And quite a big night on the markets. A lot of markets falling heavily on this US trade war. So interesting that we're seeing that. And the dollar is down slightly. We haven't quite yet activated this downside target, which is a further 3% lower, but we are still bearish below the cloud, and the outlook for the dollar is still weak. And looking at the euro is looking stronger on that dollar weakness, but we do still have some downside targets here as well. So a mixed picture there for currencies at the moment. Japanese yen, dollar heading lower, touching that 104 level, so quite significant there. And then if we look at sterling, sterling is still rising up, looking strong against the dollar. Again, that dollar weakness. So 144 is the target. That's another 2% upside. And of course, good news coming out on the Brexit negotiations is helping sterling. And we're just seeing it flattening against the euro at the moment, but we are still bullish on the medium and long-term charts. Still work to do to turn bearish long-term. Against the Swiss franc, we're down slightly. Against the Australian dollar, also just down slightly. And just holding that bullish position just. Bitcoin down 2.5% this morning, just heading back into bearish territory there, so that is a little bit of a concern for Bitcoin. Looking at the longer term chart, we see here how prices are moving below the cloud, so Bitcoin is still just struggling. Medium and short-term charts are bearish. The S&P 500 index closing below the March low that we saw. Remember, what we like to see is higher highs and higher lows, but in here we've got a higher high and a lower low. So this is a fan pattern opening out, which is indicating uncertainty increasing about the market. And so it's very hard to call whether we're going to take out this low or take out this high. And indeed, the Nasdaq 100 index, we've still got the Nasdaq 100 index did make a new high, but hasn't quite yet made the new low against that March low. But interestingly, we are seeing a lot of the sell-off driven by tech. 4.7% downside target on the Nasdaq 100, and it was about 4% downside on the S&P. Looking at the Dow was down 3% overnight, new March low as well. So really starting to come back and test these lows that we saw previously. We've got downside targets as much as 5% here on the medium term chart. So it's starting to look quite like a top. And when we look at the lagging line, which is the weekly line chart, we start to see we're at risk this week, closing out the week lower than the previous week, and that would be significant. So today will be very critical for the US markets. Will people buy these dips and come back in? The Russell 2000 also just turning bearish. Didn't quite manage to make a new high. Short term turning bearish, not making new lows. So the sell-off has been mostly in the large caps. So that's been quite key. S&P future is down about 0.25%, and the Nasdaq E-mini is down 0.2%. So significant moves there, and it does look like the US market will open lower again today. Whether we can see an end of week recovery, that's going to be the really key thing, or are we going to capitulate and sell off lower? The FTSE 100 smashed through 7,000 yesterday, and we've gone lower again this morning. We'll take a look at Asian markets in a minute, but prices now below the weekly cloud. The FTSE just looking really dire, and the FTSE 250 is also selling off quite strongly this morning, starting to threaten that February low. Interestingly, on the FTSE 100, we're already below that February low. On the FTSE 250, we're not quite yet there, but it does look like that's going to break as well. A shortage of short-term downside targets, but a 13% downside target and a 12% downside target on the long-term chart, which isn't quite yet activated, but it is on the medium-term chart. Looking at the DAX, it's down 1.33% this morning. So again, significant. We're not making new lows yet on the DAX, but it's bearish, 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 really. The long-term chart is holding up, but we do have big downside targets, about 18%. So the market's all just in this shock phase at the moment. The CAC 40 is actually taking out the March low, but not yet below the February level. So, and a shortage of downside targets here as well that are activated, but it is bearish, so we can't deny that. Now, Asian markets really suffered because this trade wars affects them more directly. And we're seeing Japan was really down significantly. We've got a short-term downside target of 10% on the Japanese market and quite a few downside targets on the medium and long-term charts. And we are clearly bearish here. So we should expect falls on the chart. We are below the cloud now on the medium term. And so no great surprises that we are seeing this sell-off. We're also seeing the Hang Seng, which has actually been one of the stronger looking markets. That was off 2.5% overnight. Not quite making a new March low, but still bearish. And if we do go lower, big downside target at 11%. So we'd have to wait now till Monday for that to happen. Looking at the Shanghai index, that was down 3.4%, so starting to look bearish there as well. And the Indian market down 1%, 1.25%, fared relatively well compared to the other markets in Asia, but no denying that this is now a bearish market as well. So we are really just seeing this sell-off across the board, and the S&P to Australian index also heading lower there as well. So really significant. Now, the one area that has held up quite strongly is commodities. Weaker dollar helping as well, of course. Crude oil just nudged the $70 mark overnight, just touching that $70 level yesterday and today. So we've got a target of 71.74 on Brent crude. Looks like we're going to break that 70 level. We're still bullish above the cloud. And looking at WTI, a similar picture. Fewer upside targets on the medium and long-term charts, but interestingly, we still are pushing for the 66 level, which is another 2.5% upside. So we are seeing crude oil just really starting to push. U.S. Natgas falling away at $2.61. Just struggling to get any traction at all. It looks like we'll be in the 250s quite soon. Fall off yesterday on our storage numbers, and it's just really, we've now got this double targets to $2.53, and that looks like where we will head next. Gold, of course, is a beneficiary of a lot of this uncertainty in the markets, and interestingly, we've activated this 1382. I've made no secret of the fact that I've been bullish on gold for quite some time. This rising pattern, rising wedge, rising ascending triangle. If we break this 1370, which is this target now 1382, if we break that level, then expect gold to really run. So it's looking pretty good for gold. And silver, similarly, we don't have as clear upside targets there. Interestingly, on gold as well, we did have a lot of downside targets here. We still got this 1261 in place, but these downside targets that were coming off these thrusts have all been negated with this new move up. So that's also significant when we're seeing downside targets coming off the chart. Gold now looking pretty bullish. So and the short term, and of course the medium and long term charts are good. Silver, the picture is a bit less clear, and we are still struggling on the medium and long term charts, but the short term chart is bullish, but gold is certainly looking pretty good. US 10-year bond yield sitting at 2.82%. We're just sitting at that level, still bearish in the short term. We've got downside targets of 274, 279, but we still have this upside potential as well, and we are bullish in the medium and long term. Taking a look at Apple shares, they were down about 1.5% yesterday. So bearish below the cloud there, a shortage of downside targets. Amazon down 2.3%. Again, Amazon has been an amazing performer of late, so it has more to give up really, and we are just now bearish below the cloud, but again a shortage of downside targets here to play at with Amazon. Alphabet, which is Google of course, was off nearly 4%, so they've really fallen away, and probably falling somewhat in sentiment with Facebook, and Facebook shares were off as well, about 2.5%, 2.6%, and it's looking still pretty bearish on that short-term chart. We've got a new downside target here of 150 on the short-term chart, which is activated. So it does look like Facebook will go lower still, and Microsoft were down 3%. So we've seen some very big fallaways there for tech over the last few days. So A bad week for tech. It will be all eyes on Wall Street today. Can we recover some of this ground, or are we going to finish the week on a low note? That's it for today. Have a great weekend. Remember, if you're in Europe, the clocks go forward. Until Monday, happy charting. See you then.